let's look at the short term today, and then if anybody has any questions, we could broaden that. But let's do short term for now.
Well, at the Good Roads Foundation, what we did was take a look after the last meeting of the working group, where it was decided that the focus would be on the short term. What we looked at is a way to accomplish what was described as immediate needs. And in the last meeting, Senator Sample rather focused on whether short-term meant immediate. And the answer was, it means immediate, but perhaps the collection of revenues that could be immediately initiated would be over a two-year period. So what we looked at very first was, obviously, we were looking at short-term funding target of between $110 million and $150 million based on the use of the money that the director just discussed. It's important to understand, I think, what the benefits of the revenue or the additional revenue would be. And so we outlined what we considered maintenance-centered objectives, and they are to improve highway and bridge safety, to reduce the cost of miles traveled, to extend the usable life of existing roads, and that is part and parcel of the overlay or system preservation discussion. Obviously, to create and sustain private sector jobs. We know of no other capital investment by state government that has a proven return on investment in numbers of jobs and economic activity than does the investment of the states, the allocation of state capital in highway construction and maintenance. And then finally, obviously, to enhance economic activity overall and economic development. So those are the objectives, or really the benefits. In terms of immediate needs, there's a limited pathway to get to significant revenue on a short-term basis. We could address the state surplus, which the department has requested in terms of $35 million of the existing state surplus. You can borrow from the Revenue Stabilization Trust Fund, but that loan has to be paid back at the end of the fiscal year, as I understand the statute on that. Or you can raise gas taxes. And when I say gas taxes, motor fuel taxes, meaning gasoline and diesel. Because for significant revenue that would net the department $110 to $125 million quickly, in order to match federal funds, in order to get them, in order to reinstate the critical overlay program, which impacts jobs in Arkansas and also extends the usable life of the existing highways, reducing our long-term costs on maintenance and construction. Motor fuel taxes, we believe, is what we have to look at, and 10 to 12 other states have already done that successfully. Anywhere from 5 cents to 12 cents per gallon in a combination of gasoline and diesel. And we can go over, we listed in our proposal of August 25th a modest review of what other states have done. But it's important to note that where other states have done, as Senator Sample said, increased some motor fuel taxes of, say, 2, 3, 4, 5 cents, those have been conservative increases because the highway departments in these other states, more often than not, have other permanent avenues for revenue other than the motor fuel tax. General revenue, other fees, other taxes that are more often than not road user revenue based, user fees, revenue that's generated by folks who use the highways and the roads and the streets and the bridges. The Arkansas Highway and Transportation Department and the deliberations of the Arkansas Highway Commission do not have that opportunity because we do not have broad-based funding for highways in Arkansas.